QuickBooks Pro Plus Desktop 2022 presentation barter transaction. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Plus Desktop 2022. Here we are in our QuickBooks sample file, sample rock castle construction, going through the setup process with the view dropdown, open windows list on the left-hand side, company dropdown, home page in the middle, maximizing the home page to the gray area. Opening up the reports drop down, company and financial, taking a look first at that balance sheet report down below, balance sheet standard. Gonna magically make it font 14 by customizing up top. The magic has now happened. We're gonna go then to the reports again, go to the company and financial. This time look at that profit and loss standard. Once again, magic 14 font for font's sake. There we have that. Let's go back on over to the home page. We've been looking at the customer cycle, looking at the flows of the customer cycle. Now we want to think about a situation that is a little bit more unusual. What if we have a bartering type of situation, a trading type of situation? We sell something but don't get money, but we get instead something in exchange for it. Note there's a problem here in that our normal flow of transactions assumes that at the end of the day, we're going to get cash that's ultimately going to go into the checking account from the customer. If we get something other than cash, what can we do in that scenario? One thing you could do if it's like a one-off type of transaction is try to enter the transaction as a journal entry. But by doing that, you lose some of the ability to kind of track your sales type of transaction. You're not using the items in the same kind of fashion as you would otherwise be doing. And if you have inventory, it would be kind of difficult to track the inventory using journal entries. So what you would like to do is use either the invoicing and receive payment or the sales receipt transactions, which are the normal kind of transactions to record the sale. And I would assume that if it was a barter transaction, you would be more likely to have the sales receipt situation recording the transaction at the same point in time, having the barter in essence happen at that one point in time. So let's assume we're bartering here and we're going to record the sales receipt to record the sale. Now note that if you do have a barter transaction, you should generally still be recording the revenue on it. It's still a sale. You're getting something in return, just not cash. You should still be paying taxes on it and the whole thing as well. So how can we basically record that into the system? In the sales receipt item, notice this, as we've seen in the past, this item will have this drop down, which is usually the default setting going to undeposited funds. That drop down may not be there unless you adjust the settings to put it there. And to do that, you'd go to the Edit dropdown, Preferences. We go down to the Payments on the left-hand side, Company Preferences, and then you want to look at this Use Undeposited Funds as a default deposit to account. That will be checked by default. Uncheck it to get your option there. I'm going to say OK. And then in this dropdown, then, we only have the ability to put this information into another other current asset type of account. So we'd have to put some kind of account that's other current asset, or a bank account. Usually we put it into the undeposited funds or the checking account. And so now we want to add another account that's going to be fitting into this area. Like if you're going to barter, there's a couple kind of scenarios that I would assume could be putting in place. The question then is, what are you receiving in return for the barter? And a couple kind of things that you might be receiving. One, you might be getting something that you're going to use in the business pretty soon, like supplies of some way that you're trading for. You do goods and services, they give you supplies, in which case ultimately you would kind of like to expense it. You don't have the option to choose an expense form here, so you'd have to do a kind of a two-step transaction to expense it. Or two, we might be getting some kind of fixed asset. Like if you traded for a forklift or something like that, then you wouldn't want to expense it. You'd want to put it on the books as a fixed asset. Once again, we can't add a fixed asset type of account here, so we'd have to do a two-step type of process. Or three, maybe you're using your sole proprietorship business to do goods and services, and you're getting paid in personal goods and services in return. You do something that you do for a business, someone fixes your kitchen or something like that, remodels your kitchen or something, then now you're getting something that's personal, that's other than money. And for that, you would ultimately want to put it to some kind of draws account, which once again, you can't choose in this dropdown. You have to set up an other current asset and then do something else to transfer it out. So I set up another other current asset, which is going to be the barter clearing account here. You could set up an other current asset by going to the new item up top. You could set it to other current asset. That's the one I would think would be the one we would want to choose. Name it right here. And then you can choose the other current asset account. I'm going to close this back out. And once that's set up, you can pick the bartering account. Then we can have our normal item that we sell. Whatever we sell, I'm going to choose a new or make a new item. I'm going to call it item 3. It's going to be a service item. I'm just going to call it item 3. And I'm going to say it's not subject to tax, so we won't be dealing with the sales tax related to it. And OK. You must specify an account. I'm going to take it to the construction income account in our sample file. And I'll say 1, and we'll say this is going to be a rate. I'll make it like 10,000 so we can then do some stuff with that 10,000 and see where we're going to put it afterwards. Okay, so this transaction then, you would think, due to the item, should increase the income account, and the other side should be going into our other current asset bartering account. I'm going to put this in as of 01/15/25, so it's out in the future, so I could see it kind of by itself out there. And let's go ahead and record that, save it, and close it. Save it and close it. Check it out on the balance sheet. I'm going to bring the balance sheet out to 12/31/25. 12/31/25, and in the other current assets account, we have our bartering account. There's our 10,000 right there. There's our sales receipt. If I change the beginning date 01/01/25, there it is. Looks good. Other side then, going to the income statement, otherwise known as the profit and loss, P&L 01/01/25 to 12/31/25. And so then we have our income. Okay, there it is, the 10,000 in income. So here is our transaction. So there's kind of the first step. Then if you go to the balance sheet, now you got to say, okay, now I've got this information on the balance sheet. The revenue is recorded. That side is correct. But now I've got this in the bartering account. And now the question is, well, what do I actually have? And where should it basically be at the end of the day? And let's kind of divvy this 10,000 up and then assume that it were for different things. So the first thing it might be for, you might have gotten supplies in some way. In that case, you'd want to be taking it out of the bartering account and applying it to an expense type of account. So to do that, if I go back to say the home page, you'll note there's no real transaction to do a transaction form to enter that type of transaction, because usually we would be issuing an expense or having an expense, recording it with, say, a check or a bill. But in this case, it's going to be coming out of that bartering account. So we could use a journal entry, or the registers might be an easier way to go as well. So in other words, to get to a register for that bartering account, you could go to the lists dropdown, chart of accounts, and then I can find that account that we just set up, which was an other current asset. There's the bartering account. If I double click on it, it'll give me a register looking kind of like a check register, and I can basically increase and decrease this. I just got to realize that I'm in the bartering account. I want it to go down, the bartering account, and the other side to go to the expense account that I'm going to apply it out to. So I'm going to say, let's do this as of 01/15/25, and I'm going to decrease it. I'm just going to do this one by 2,000 of the 10,000 so that we can practice our other scenarios with the rest of them. And I'm going to put this other side into some kind of expense account, like supplies expense. We don't have supplies sales orders. No, that's not it. Some kind of expense account, drop down. What does the construction company have here? Payroll, office supplies. There it is. Office supplies on the expense account. And let's go ahead and record that. And then opening up the item on the left-hand side, we could say then let's go back to our balance sheet. Now we've cleared out 2,000 of that 8,000 going down. 01/01/25 to 12/31. So we've decreased that one by the 2,000. Other side then going to the income statement. and we're assuming that we're going to use the office supplies and we expense it, assuming we're using it in the business. All right, the other assumption we might say is like, well, what if we got some kind of asset that we're going to use in the business, such as equipment, furniture and fixture, or something like that, a couch that we got or something that we're going to use actually in the business, but not personally. Let's see what that, we could do the same kind of thing. We could do a journal entry now, but now I want to put it into some kind of fixed asset account, such as possibly furniture and fixture, because I'm not using it yet, and I'm going to depreciate it over time. So in that case, I could go to the bartering account, same kind of thing, in the register, and say we would take it out of there. Let's say another 5,000 out for the couch, we're assuming. And then this goes into furniture and fixture, that account being a fixed asset type of account. And then we'll enter that transaction, record that. So there we, and this should be, let's make this, that should have happened on 01/15/25, and there we go, record that, okay. And then we go back to the balance sheet again, and we should see then the Barter account now down to 3,000. So if I see the activity 01/01/25, 10 down by 2, down by the 5 to the 3, closing that out. Other side then going to the furniture and fixtures account, changing the date here 01/01/25. So there's our 5,000 in that account. The other scenario we might have is that we bartered for something that isn't business related but personal related, and therefore we can think of it basically as we got something in the business then gave it to us. So we'll assume that scenario for the last 3,000, and that means it should come out of the 3,000, and it's kind of like a draw. We're taking it out for our own personal use. So in that case, same kind of thing, but it needs to be down here somewhere in the equity type of account. It needs to be going in down here somewhere. So I'm going to go then to the barter transaction again for that last 3,000, I think it was. Let's just do 2 of the 3. This is going to be 01/15/25, another 2,000. So the barter account doesn't disappear entirely. And then we're looking for some kind of equity account now. It needs to go to equity, and I would call it draws. They've got shareholder distributions, would be similar to draws. Let's go with that. It's got to be an equity type of account would be the idea. And then we can record that one. And in that situation, if I go back to the balance sheet now, then what's left in the barter account will only be that 1,000 left, I believe, at this point. Double clicking on it, looking at the activity, date range 01/01/25 to 12/31. Last amount, that 2,000 being removed. The split account going to the equity account, shareholder or something. Closing this out, going down to the equity side of things. Equity side of things, we've got the shareholder distribution. There's the 2,000 down below. If it was a distribution, the other side shouldn't be an impact in the income statement. So there's just a couple scenarios that you might see if you have kind of that more unusual type of situation, which could be usual for some, depending on what type of industry you're in, and trying to use the same kind of flow process to deal with the fact that you might have bartering types of transactions for different things.